Forbes put Lionel Messi at around $135 million in earnings in 2025, and that was almost identical to where he was in 2023. That headline is the least interesting number though in his business. The more telling figure sits on the books of a Spanish family holding company most people have never heard of, that has €86.2 million in image rights income in a single year, up 60%. And that is the real engine. The playing contract of Messi is now the smaller half of the story, and the rights business is only one of 7 layers in something Messi and his people have spent the last 3 to 4 years quietly assembling. Today we are going to be talking about the architecture of what is now one of the most carefully structured commercial platforms in modern sport. And if you're the kind of person who wants to understand the business behind the headlines, not just the transfer fees in football, hit the subscribe button down below. This is what we do every week here on Boardroom Ball. To call Messi's portfolio a business empire almost flatters the wrong things. There is no vertically integrated conglomerate, no Messi Holdings Inc. that owns the hotels and the drinks company and the venture fund in a clean corporate tree. What does exist instead is an intellectual property and partnership ecosystem with Messi himself, his name, likeness and the leverage of a still active playing career sitting at the centre. Around that core sits a Spanish rights and management company, Leo Messi Management SLU, and this actually operates as Messi.com. There is also a family holding vehicle, Lemesio España 2010. There is a listed property trust, Edifico Ross Tower, and around those sits licensing deals, hospitality, real estate assets, startup investments, new consumer products, media ventures, and an emerging football ownership portfolio. In practical terms, the empire has 7 pillars: the playing contract, the endorsement and image rights income, apparel and licensing, hospitality and real estate, consumer products such as Mass by Messi, venture investing through Playtime, and football and media ownership plays. This includes 525 Rosario, Deportivo LSM, and also UE Cornella. The official site even reflects this, linking directly to the Messi store, the Messi experience, Mass and other branded projects, which is a useful window into how the brand is being organised for fans and commercial partners alike. Now, some of these pillars are royalty heavy and capital light, things like apparel licensing and endorsements, where the cash comes in without the operating burden. Others, like the hotels and real estate, are capital heavy and slow moving, and some, like the venture book, are openly speculative. The diversification here is not by industry, it is by the monetization model. That is what makes it a bit more sophisticated than the average superstar athlete portfolio. Even with all that, the largest and most reliable source of cash is still a combination of playing income and image rights income. The MLS Players Association 2025 salary guide listed his annual guaranteed compensation at over $20 million, by some margin the highest in the league, and reporting around the original Inter Miami deal put the total package at up to $150 million over 2.5 years once signing bonuses, commercial extras and equity related upside were folded in. But the cleanest window into where the actual money concentrates is Limassol. Spanish business reporting says the family business generated €109.3 million of revenue in 2023 with €15.1 million of profit. Inside that, image rights income jumped 60% to €86.2 million. So the image rights line by itself is the size of about a mid-cap consumer brand. It is bigger than what most full football clubs make from kit sponsorship, and it is growing fast. That is why the strategic centre of the empire is not hotels or the venture fund or even the playing contract. It is the rights machine, and everything else will feed off it. But the 2022 World Cup and the 2023 move to Inter Miami changed the shape of the portfolio in a way that few player transfers have ever imagined. Reuters reported in 2023 that the deal included a share of revenue from Apple's MLS season pass and the ability to maximise his existing Adidas relationship alongside a path to future ownership. That is the line that matters more than the salary he actually got. Messi's incentives stopped being aligned only with his wages and started being aligned with the league growth, with streaming subscriptions, with merchandise, with sponsor inventory across an entire continent, and also the growth of Inter Miami itself. In January 2026, Reuters also added that the contract included a future minority ownership stake in the club, and in October 2025, the club extended them through to the 2028 season. The financial echo of that move also shows up in the club evaluation. Sportico put Inter Miami at $1.19 billion in 2025 and $1.45 billion in 2026. So roughly $250 million of value in 12 months, on a franchise that had no real continental footprint before Messi arrived. The club's co-owners David Beckham and Jorge Mas sit on the other side of that flywheel, and so do MLS itself. So unlike some players, he's not actually attached to a team. It is closer to a strategic growth asset embedded inside the league with a personal stake in the upside of every part of it. Although the likes of David Beckham did strike a similar deal with LA Galaxy in the 2000s, this seems to be a genuinely new way in superstar player careers being structured. Stepping away from the cash engine, the picture broadens into 4 operating clusters that surround it: the real estate, the consumer products, the venture book, and the media. And as we've mentioned, the real estate side runs principally through Edifico Tower, founded back in 2013 and listed in December 2024 on Spain's Portfolio Stock Exchange at a €223 million equity valuation, with a share price of over €50. It was also reported that the trust's assets included hotels, offices and apartments in Spain, Andorra, London and Paris. Messi sits as chairman with his wife as vice president, with the family vehicle as the sole shareholder. The hotels under this structure mostly sit under the MIM Hotels brand. The first visible purchase was MIM Sitges in 2017, bought for about $30 million through the Rostel and Limacu structures. Majestic initially managed the MIM estate, and by late 2025, Melia Holdings International had stepped in to manage the portfolio as part of the Melia collection. And in May 2026, the trust added another building, the former Via Wagner in Barcelona, for €11.5 million. Secondly, the consumer side is anchored by Mas by Messi. This launched in June 2024 with Messi as a co-founder alongside beverage partners from Marc Anthony Group. By May 2025, Mas had become the official hydration partner of MLS Next and MLS Go, which is exactly the kind of route a new beverage brand needs to scale. By August 2025, the company was telling press that a new flavour was already in Walmart stores nationally. The logic is plain: use the football halo Messi has amplified across North America and build a CPG brand that can outlive the playing career. Thirdly, the venture book sits inside Playtime, launched in October 2022. The fund describes itself on its own site as Lionel Messi's upcoming $200 million fund and incubation studio, with publicly disclosed investments including Matchday and AC Memento, alongside broader artificial intelligence and technology bets. The media arm of this is 525 Rosario, launched in September 2024 with Smuggler Entertainment. This had a mandate that covered television, film, live sports, community events and branded commercials. Together, Mas, Playtime and 525 Rosario describe a deliberate shift from endorsing other people's finished products to owning the brand, the platform or the rights layer wherever possible. But lastly, the Apparel story tells the inverse case study. This is the one where things did not go as smoothly and is one of the most useful window into how this whole system actually operates under stress. Between 2018 and 2021, the Messi Lifestyle Apparel project ran through a licensing arrangement with MGO Global, which later disclosed worldwide rights and minimum guaranteed royal obligations to Leo Messi management totaling around €4 million, with the final payment due in November 2024. MGO's SEC filings show the operating reality. In 2023, MGO had $5.36 million in net revenue and $7.14 million in net loss, with $1.7 million of royalty expense alone before marketing, logistics and public company overhead. Inside that, the Messi brand line contributed roughly about $1.6 million of MGO's revenue against the same royalty bill. In March 2024, the license was assigned to Centric Brands for $2 million in cash, with Centric also taking on the 2024 minimum guarantee. By June, Centric had announced an exclusive global licensing pact across apparel, accessories, home textiles and other lifestyle categories. In plain language, Messi's side kept the intellectual property. The operating risk simply moved to a better capitalised distribution partner. The IP owner wins even when the operating partner is struggling. And in short, that really is the entire model. But what ties all of this together is the trajectory, not the snapshot. Between 2024 and this year, Messi has launched a founder-led beverage brand, shifted apparel licensing to a stronger operator, started a content studio, listed his real estate trust, deepened his Miami and MLS relationship with a longer extension, joined Luis Suarez in the Uruguayan venture Deportivo LSM, formally acquired UA Cornella in April 2026, and added another Barcelona property to the trust in May 2026. And the pace of that portfolio construction for someone that is still playing at, technically speaking, an elite level is unusual. So looking to the medium term, the picture is that Messi probably becomes more of an owner than an endorser. Reuters has already reported his stated ambition to own a club after retirement, and the recent deals point the same way. UE Cornella in particular is a relatively low-cost football operating platform inside the Spanish system, the kind of asset that a retired great can use for development, recruitment and long-term institutional building. If Mas keeps its retail rollout, if 525 Rosario lands repeatable sports entertainment formats, and if Playtime's portfolio of companies mature, the empire could start to resemble a modern creator athlete holding a system rather than a celebrity endorsement stack. But ultimately, how much, thanks to this business portfolio or business empire, is Lionel Messi actually worth? Well, most reports would actually put the amount between around $700 and $900 million, so it's safe to assume with multiple reports that it's around the kind of 800 million range. Now, this means he's not yet a billionaire. He has had over $1 billion in his player career earnings, but at the moment he doesn't quite pass that threshold. Now, growing assets, as we've talked about in this video, may eventually make him a billionaire, but I think it's important to also look at the pessimistic version of the medium-term picture, which is overextension. Rosster's widening losses, the ambiguity around hotel counts, the mixed record of smaller Messi brand retail vehicles, the potential reputational drag from politically and financially controversial partners all show that brand power does not just eliminate execution risk. But that is simply the tension at the heart of all of this. The same fame that built the platform is also the only thing holding it together. Whether that fame outlives the playing career and whether the operating infrastructure he is building now is strong enough to carry it forward when he is no longer scoring goals is the real story of the next decade. The empire is built for that moment, but the next 10 years is going to tell us whether it works and whether he will ultimately become a billionaire within the footballing world. If you did enjoy this video and want more football business content from Boardroom Ball, don't forget to like and subscribe down below. Thanks very much for watching, and we'll see you next week.